and generally they're using Coinbase custody as the sort of favored provider today for these ETFs. But again, that kind of feels like the only game in town in many ways. I'm sure if BNY Mellon, who BlackRock has used for all their products over decades, if BNY Mellon suddenly said they want to get into this game, and it's no secret that these banks are looking at this sort of stuff, then you can be sure they're not going to follow a sub-custody model where they're basically filling the role of custodian, but Coinbase is somehow underneath them as a sub-custodian. You're going to have someone like BNY Mellon want to run everything in-house, have their own tech, have their own offering, which again, they control and provide as a service.
This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Sebastian Higgs, who is the co-founder and chief operating officer at Cordial Systems. Sebastian, great to have you on.
Thanks for having me, Tony. Good to be here.
Sebastian, I'm excited to speak with you. You have a plethora of experience as it relates to custody in the crypto space, and you guys at Cordial are doing some very interesting things. So definitely have a lot of questions around what you're doing, but let's start with your background. Tell us about where you're from and your professional background as well.
Sure thing. So I'm from a town a few miles out of London in the UK. Spent a lot of my years there growing up and a lot of my professional time as well, but I'm also half French on my mother's side, so a lot of influence from that side of the world, and spent some time growing up and living as well in Belgium and Germany. So pretty much an all-round European, I guess you could say at this point. But yeah, London remains home for now. And on my professional background, so I guess to use American terms, I majored in physics when I was at university, and quickly decided during my master's degree that I wasn't going to sign up for a PhD program. Working with nanotech in a dark lab all hours of the day was not my idea of fun after all. So decided to quickly jump off that bus whilst my friends were earning a paycheck in the city of London. I sort of followed suit and sold out of the science game and joined Goldman Sachs in their London office. So TradFi, I guess, is my background, mainly in risk management functions relating to the OTC trading business, as well as securities lending and repo desks. And then, yeah, after a few years of working in TradFi, I moved on and left that pretty conventional career path to pursue the crypto thing. This is probably 2017 now, and which, being a crypto podcast, I'm sure we'll spend a few minutes talking about that at some point.
For sure. Yeah. So I'm fascinated about your time at Goldman Sachs because I know at some point they were all against crypto. They were all naysayers, but now many of them are on board, like BlackRock and many of the Wall Street banks. So what are when you were there, were they exploring crypto, looking at Bitcoin and things like that?
So when I was there, if they were, I wasn't a part of those conversations. However, I think my first brush with Bitcoin and blockchain was still when I was at Goldman. So I did sort of put it to my MD and I said, hey, this sort of blockchain tech thing, what are we thinking? What's Goldman thinking? I did get some version of an answer. So I guess you could say it was on the radar. I couldn't tell you how much it was on the radar at that point. I think yeah, it was probably just kind of this sort of thing in the room which everyone was trying to make sense of. It was probably after I left, I was still in contact with a lot of people at the bank who'd actually started to focus more of their time on digital assets. So I don't know if this was part of a newly created division or what, but there certainly seemed to be people around 2017, 2018 who were definitely kind of more focused on this stuff as well as some more traditional securities markets as well. So they were definitely well, behind closed doors, kind of doing their homework, shall we say. That's kind of the impression I got. And I'm sure across the street, all the banks were kind of doing similar things.
For sure. And what was your first encounter with Bitcoin, and when did it click for you? What was your aha moment?
Yeah, my first encounter. So I said it was probably towards the end of my time at the bank. Probably how a lot of us got inducted into this world. Yeah, a friend kind of said, "Hey, do you know about this Bitcoin thing? And you work in a bank and markets and such. Do you have a view?" So I kind of did a quick Google search, I think, at some point, like just had a few minutes spare. And to be honest, I was initially a bit dismissive of the whole thing. Like I guess like a lot of people, my gut feeling was, speculative asset, a
Yeah.
lot of risk. You can win a lot of money, probably lose a lot of money as well, which is basically a warning label you could probably stick on any investment products.
Yeah.
And in hindsight, was not an unreasonable position to hold on the topic, but again, didn't really constitute a well-informed or well-researched argument on my part. It's more just sort of a snap judgment. So going to the aha moment, that was more probably during 2017. So after Goldman, I took a year out
Mm.
pursuing another degree at Cambridge. And whilst I was there, was reading a lot of stuff on blockchain technology, spending some time trading crypto, using crypto service providers. Um, and yeah, that's probably sort of where it clicked for me, somewhere between the Bitcoin white paper and hearing Andreas Antonopoulos talk so eloquently on the subject, and just trying things out on chain, which I think even till to today, people still generally would say, getting hands on, trying things out is just a great way to be a student of this nascent space. So I think that was kind of when I had my aha moment, and it was already clear back then, there's real innovation, there's real use cases already in play. And I would generally kind of describe 2010 to 2020 as that period where experimental digital currencies kind of announced themselves on the world stage. And now 2020, 2030, we're seeing the results of that kind of play out now with all these different things going on in the world, whether it's BlackRock or CBDCs and all the rest. So yeah, it's probably around 2017 was the aha moment. And since then, a lot more people seem to be having that aha moment in the
Yeah.
mainstream as well.
For sure. That's an understatement, right? They're all here now, it seems like. You mentioned Andreas Antonopoulos, and he was a big part of how I learned about Bitcoin as well. And when having my aha moment, reading the white paper, but then listening to Andreas talk about it. So very similar, a path towards learning about this that you had. Now, you spent some time at, if I read this correctly, Genesis Global Trading, if I'm not mistaken. You also started a digital asset custody business, which was acquired by them. Can you clarify that, please?
Yeah, so this was probably my second job in the crypto world. So joined a existing cold storage custodian in London that was called Vault at the time. So I wasn't one of the founders on this particular project, but definitely founding team and part of the leadership and all the rest. But yeah, as you pointed out, this custodian was acquired back in 2020 by DCG and Genesis Global Trading back when they were the biggest prime broker in the digital asset space. So we were very much acquired to be a part of that prime brokerage strategy. They obviously had the trading desk, the lending desk, derivatives, and everything else. And they just needed to complement with the custody side of things. So yeah, we were brought in 2022 to help facilitate that. So yeah, I did spend some time over there. In many ways, was kind of reminiscent of being back in a bank. In other ways, not so much as well. But yeah, I was there for probably about a year or so at the acquirer before again, kind of hopping off and getting back to startups because builders want to build.
For sure. So that's a good segue into Cordial Systems. What led to the creation of Cordial Systems, and tell us about, the services and the mission and so forth.
Yeah, so I would say on Cordial Systems itself, so we are a technology company first and foremost. Again, we focus on digital assets and the cryptocurrency space. Taking the long view, our mission is to protect enterprise resources in today's distributed environment. So resources there is a bit of a catch-all term, covering employees, machines as the users as well, a variety of digital assets, which could be cryptocurrencies, it could be something else in a more general sense, as there are many digital assets that sort of need protecting as they carry some operational value or intrinsic sensitivity. It's not just blockchain addresses and the balances that they hold. There's also a bunch of other things in the enterprise which have an operational sensitivity component to it. So right now, we focus on self-custody for crypto and digital assets. But again, this is generally applicable to a wider distributed workflow involving multiple internal or external parties collaborating on a task to achieve some goal in the world of trading. So what we have right now is our first product, which is Cordial Treasury, and it helps institutions to run software in-house for the purposes of holding crypto and assets across 35 public blockchains. So all the Bitcoin and the Bitcoin forks, the EVM chains, which are out there, Aptos, Solana, you name it, we've probably got it covered. So this product, whilst being self-custody, it's kind of a label, I guess, that's been around for a while. But we sort of approach it in a very different way. And we're kind of the first solution out there that's a self-custody product that doesn't have all the risk associated with being SaaS hosted or vendor side hosted, which has been problematic in many ways for institutions engaging in our world with the blockchain, particularly those who are more of a traditional background who like to maintain a lot of control and keep things in-house. They don't like to outsource as much or delegate things that they perceive to be critical to the functioning of their business to just some some startup or newcomer. They generally like to retain all of that in-house. So yeah, we help to facilitate that in a way that's a little bit different to what else is on the market.
So let's do like a mock scenario here. So let's say BlackRock, right? They have a Bitcoin ETF that they issue. They're tokenizing on Ethereum. They are in the running for an Ethereum spot ETF as well in the United States. They're currently using Coinbase custody for their Bitcoin ETFs and so forth. But let's say they use Cordial, they would be able to essentially build that in-house self-custody and potentially be able to hold those funds, right? That's essentially what you're enabling these institutions to do.
Yeah, I mean, that is one aspect of it. So exactly right. A traditional player could come in and use Cordial and kind of have their own means to internally manage their crypto or their digital assets. Specifically for the ETF side and BlackRock, I think with the launch of the Bitcoin ETF, we've seen that they're following a very traditional framework in that exchange traded products is kind of a value chain with multiple actors, and they all have that kind of separation of roles or responsibilities. So, BlackRock might be the issuer, there'll be someone else as the authorized participant, someone else is a market maker or transfer agent, and all the rest. So it's probably less likely that we see someone like a BlackRock go downstream and custody assets themselves. But you could equally just look at, well, who do they use today for the custody side? And generally, they're using Coinbase custody as the sort of favored provider today for these ETFs. But again, that kind of feels like the only game in town in many ways. I'm sure if BNY Mellon, who BlackRock has used for all their products over decades, if BNY Mellon suddenly said they want to get into this game, and it's no secret that these banks are looking at this sort of stuff, then you can be sure they're not going to follow a sub-custody model where Uh, they're basically filling the role of custodian, but Coinbase is somehow underneath them as a sub-custodian. You're going to have someone like BNY Mellon want to run everything in-house, have their own tech, have their own offering, which again they control and provide as a service. So that's a good example of someone that might come in and maybe use our product and say,
Mm.
"Hey, we're basically partnering with someone in industry, but we've got this as a standalone business line, which they
Mm.
themselves can operate."
Oh yeah, that makes sense, right? Building that digital asset crypto arm or segment of the business, and they could use like your technology to help the self-host have the self-hosted custody, right? Am I saying that right? Framing it right?
Yeah, self-hosted, self-custodial. I mean, there's a lot of again, crypto is always loads of labels and buzzwords, but yeah, with our product you can self-host it, and you would be self-custody in that you own the underlying assets or have control over the underlying assets.
Hmm. Now, obviously you're doing this on an institutional level. As a retail investor, and many of the retail folks who are listening, they're familiar with the self-hosted retail wallets, right? Whether it be MetaMask or Coinbase Wallet or whatever it is. Is it kind of the same setup where there's private keys, or is it much more complex?
Yeah, I mean there's a lot of overlap in terms of you're kind of solving similar problems. Like you pointed out, the private key, that's first and foremost, if you spend any time in the crypto world, you know that's something you need to absolutely keep safe. And that's true whether you're on the institutional side or retail user. Um, Again, there's going to be a range of products out there, like you pointed out, MetaMask, these browser wallets, or even maybe using something like a Ledger or a Trezor if you have um, something a bit more offline in your sort of personal capacity in managing your crypto. But again, it's a very different set of requirements or needs that a individual will have versus an institution. So um, you know, on the institutional side, we're looking at not only is the key secure, and there's a bunch of questions attached to that and sort of scenario planning in determining is it secure or is it potentially open to some risk. But there's also everything above that around, well, who has access to the key or how do you manage any sort of authentication and authorization of a user that might be interacting with that key. Because again, these institutions are going to have teams or people across multiple teams with different interests in interacting. It could be a compliance person, it could be an operations person or a trader. So you need to balance in bigger, um, a much bigger context from institutional side in providing this sort of product versus retail, where you're kind of saying like, well, I want my funds to be safe, but I also want them to be usable in terms of I need to send them from A to B, but equally I want to assign stuff on DeFi if I'm maybe interacting with like Uniswap or um, putting things into liquidity pools and earning some yields. That's kind of where you may want to find that there's a lot of utility as well versus, you could have on institutional sides, again, depending on institution and how well versed they are with crypto or how comfortable they are with crypto, they might just say, I just want to secure my assets at rest. And also when I move them from A to B, I'm not yet looking at staking or interacting with Uniswap and these other things. So it is quite a different landscape and versus the retail world. But again, they all kind of benefit from each other. So
Hmm.
we have this thing like multi-party computation on the institutional side. You have account abstraction on the retail side. There's a lot of projects happening in that space now. So they do kind of inform each other somewhat. But again, I think on the retail sides, there's just less less boxes to tick and less needed as far as bringing a power tool to the market, which an institution is going to want.
Yeah, absolutely. Now, is your product on chain? Is it like on a specific blockchain? I know you mentioned there's interoperability and you support many different coins, but is the product itself on any specific blockchain?
So interestingly, with our product, there is a blockchain component to it, which is, as far as I know, not something that exists on the institutional side today. So we use for, if we have any cosmonauts out there who might be watching, we actually use the Cosmos SDK and the Tendermint consensus algorithm for certain parts of our system. And that enables us to kind of have like a custody app chain, I guess, to use sort of crypto terminology. Um, but it unlocks a lot of benefits. So, namely, a lot of other solutions on the market today is, as I said, it's all standard SaaS model. You're a customer, you're doing API calls to this vendor to use the thing that they host and that they offer, and you're very much kind of on the outside. Whereas with our product, this is a software you can run on the customer side on their own servers. And so those servers can act effectively like nodes for your own custody Cosmos blockchain.
Mm,
So that gives you a bunch of benefits around, well, not having any privileged actor have access to any of the keys. So we'll have a key share on each of these nodes. So you can have four nodes deploy, you can have 10. It's entirely up to the customer. And each of these nodes runs the software. So they don't have to trust each other. They all kind of have the same thing under the hood. They're all running the processes and they kind of say, right, I understand the answer to be A, and then they can look at each other and go, do you have A? I have A. That's where the consensus model comes in. So if anyone is malicious or a node is corrupt or failing, it kind of gets excluded from that consensus round. And you basically get to a point where these nodes not only have a key share themselves, but they also have the policy engine, which is important because traditionally in the institutional custody side, that policy engine sits with the vendor, which is a
mm.
single location. You trust them to keep it secure, to sort of manage access around it. But again, if that gets tampered with or interfered in any way, you'll quickly discover that not my policies means not my keys, and therefore not my keys, not my crypto kind of thing. So there are a lot of institutional learnings around it's not just about solving for the private key, it's also about solving for distributing the policies, which determine how these keys ultimately get used. And we found a great solution to do that, which is kind of using this Cosmos SDK blockchain component is certainly part of it. So that's another kind of bit of security innovation that we brought to the custody world.
That's awesome. Are you able to share maybe any institutions you're working with? I know sometimes these things are under wraps and NDAs, but any that you can, if not names, maybe the types.
Yeah, sure thing. So I mean, at the moment, we've announced kind of back in March that this Cordial Treasury product is live.
Mm,
So we kind of took it to market with our early cohort of customers. And the two that we named of that cohort were um, Jump Trading Group, which is a proprietary trading firm, kind of
mm,
mentioned alongside typically like DRW or Citadel or Jane Street.
mm,
They're of that ilk. So Jump Crypto, they use our products for all of their digital asset trading flow now. Another name we mentioned is Backpack Exchange, which if you're on crypto Twitter, which a lot of the audience are going to be very big on the crypto Twitter,
mm,
you probably witnessed their own incredible growth story. They're one of the largest centralized exchanges now, particularly on the Solana side of things and the Solana community. So yeah, there's just two examples of customers we work with, but generally speaking, Cordial Treasury is there for prop traders, market makers, exchanges, and in fintechs as well that want to offer a crypto product to their customer base.
mm. Now, I know we kind of touched on it earlier that, maybe depending on the jurisdiction and like, we talked about BlackRock as example and with the ETFs, but do you see the future of crypto being from the institutional standpoint, more self-custody, kind of using your systems, given that the technology is much more advanced, there's better security layers and so forth. There's more advances like what you guys are essentially doing, making it easier, providing all the bells and whistles with this service. Do you see it that more of these folks are going to self-custody using technology like yours?
Yes, so I guess the answer is yes and no. So maybe just to kind of give a bit more context around that, how the institutional side has progressed so far today
Mm.
is, I mentioned starting off at this cold storage custodian. So the cold storage model or offline storage was very much the um, first way that institutions were keeping their private keys safe, and that necessitated a fully outsourced relationship. You would basically have a custodian or someone trying to be a custodian would basically look after your keys and provide all of this security guarantee. Um, and you have to maximally trust them with that. So it requires a lot of due diligence and all the rest to properly evaluate those providers. However, there was also another sort of friction or difficulty, which is when the assets are offline and it comes time that you want to withdraw them, that process can take a little while. So if you're an active market participant, and again, slow is a relative term, but if you're very active in the market, it is slow to the point where it's just not really usable because you're maybe moving out of positions on a regular basis, or you need to fund your activity on an exchange. So these MPC wallets or multi-party computation wallets came along and said you could have similar security guarantees to cold storage, but with the instant access of a hot wallet.
Mm.
So you don't have to suffer this lag time when it comes to withdrawing your assets. They're a lot more usable. It isn't some like security brick where, yes, it's secure, but the trade-off is you don't have the speed of access. So NPC wallets help strengthen the signing operations and give a bit of power back to the end customer. And again, they were kind of the first self-custody type of product because they gave a key share to the customer, and then the other key share typically resided on the side of the vendor in their servers. So this was kind of the first movement towards self-custody. And again, that's obviously accelerated as well with the likes of FTX collapsing. People are a lot more aware of kind of counterparty risk or leaving assets on exchange. So there's just a lot more motivation towards self-custodying. And that's kind of where we decided to step in as well as Cordial Systems with this treasury product. Because again, the MPC wallets give some signing power back to the customer, but you still rely on the vendor to run the other 95% of the custody processes. And we decided to really flip that on its head and said, well, can we make it safe that the customer can run 95 and we run 5%? And
Mm.
effectively, that is what we've done. So as a partner to these customers on an ongoing basis, Cordial Systems is just doing code maintenance, code updates. It's a true software supplier relationship.
Mm.
You don't need us to be online to sign stuff or have our databases working or whatever it is. That can all run locally on the customer side, which is, again, extending the definition of what is self-custody. And if I want to have maximal control myself, I don't trust anyone, I don't want to rely on anyone or have dependencies. That's really where we come in, and that's the strength that we offer. So yeah, big institutions which are highly regulated or just very security conscious, with all these things going on in the market, they're very much looking to take control of their assets.
Mm.
So that's very much where we can step in.
Yeah, absolutely. And what's on your 2024 roadmap or the remainder of 2024?
Yes, I mean, lots of things going on. I mean, we're obviously always adding more and more blockchains as the market just moves so fast. There's mainnet launches every year, and there's some pretty big networks going live later in the year. So we've got an eye on that and sort of being one of the first to support them as an institutional wallet. That's another strength of us, just being able to add any new blockchain in the space of about a week,
Oh, wow.
which again is very, very important for our market makers and prop traders out there. But kind of besides that, we've spoken so far about Cordial Treasury as a product for the self-custody. So all of our customers today are running this software in-house on multiple servers.
Mm.
There is a world we're also working towards where if you're maybe a mid-size or a smaller shop, you might say that's great, but I can only run on two servers, and I want to have Cordial or someone else run the other part of the software on some other servers externally, which is a very reasonable deployment model to have,
Sure.
more of a kind of co-hosting type of relationship. So we're also working to have commercial partners that can kind of host our software for institutions as well.
Mm.
And then there's even a third model, which is where things get a bit more interesting again. That is, do we explore having the software run on servers at different entities, which are kind of connected in some way by some sort of trading agreement, shall we say? So at the moment today, I mentioned, FTX collapsing. That's led to a lot of what's known as off-exchange trading now. So the exchange is now more of a pure execution venue. You don't really leave your assets there. And a lot of institutional traders are actually leaving assets in a self-custody or custodial account and then trading directly with those assets being held there, trading directly with an exchange. So there's becoming more and more of a divide in the responsibilities of who does what, but at the same time, these bits of market infrastructure are becoming more and more interconnected, which is mirroring the traditional finance world in many ways. And we sort of wonder with our sort of unique approach of having this kind of blockchain style product, you can almost have nodes running, say, one at the exchange, one at a custodian, or one at the customer side, or whatever the case might be. And they have some sort of legal relationship that governs how they do the trading between them. But rather than trusting someone to, host things, they can kind of have this shared bit of software where they all have transparency and they can see exactly how things are done, and it really opens up that trading relationship in a way that's not been possible so far. So yeah, constantly trying to improve the self-custody thing, but equally being mindful of that a lot of our customers are active traders and participants in the markets. So we also need to extend our product into other areas.
Mm. No, a question, a thought came to mind when you were talking about some of the upcoming things. I'm assuming that anything on chain, whether it's an NFT or tokenized stock or real estate, you can support because it's on chain, right?
Yeah, exactly. From a sort of technical standpoint, we could support anything, any sort of ERC20 token, or could be a token on Solana or issued on some other blockchain as well. So yeah, it very much from a technical standpoint, super easy. I guess the question always comes down to maybe the classification of the asset itself to say, hey, is this a representation of a security, or is this thing itself the security? In which case, do you maybe need some appropriate licensing regulation to permissibly hold this thing. But yeah, you're right.
So I think a good segue, because one of my list of stuff was to ask you about crypto regulations. Now I'm in the US, you're in
Mm.
the UK. The US is, despite some headwinds, we've got some ETFs, we got some things going, but there still isn't clarity. I know the UK has some clarity, the EU has some clarity. Um, how are you feeling about the regulations that have been put out by the UK and the EU?
Yeah, I guess in general, all the regulators in different jurisdictions are kind of going at their own paces, and it's for a long time been a bit of a patchwork of different frameworks to contend with. So back when I was doing the custodian thing a few years ago, in many ways that was a bit of a nightmare because you're trying to be compliant to go into different markets, but you almost have to do like specialized work for every market you're trying to go into, whether it's US, UK, Europe, Hong Kong, and all these things. So it still very much feels like that's the case. And at least in the UK, there is a rather slow approach still to regulation. The FCA did roll out the registration component, which was more of a anti-money laundering style of just checking that you're doing your sort of basic compliance requirements under the money laundering regulations. So that was a very obvious first step and a good first step in terms of not biting off more than they could chew and kind of making very difficult asks of the different providers out there, which are maybe in the context of crypto can be just not possible, and it can show a lack of understanding on the part of the regulator. So there's been some good discussion and thoughtful progression, I'd say, from the UK and EU. And I'm maybe not as close to the US side, but like everyone else, I've been watching the legal battles, and that seems to be endless memes going around about how SEC offers investor protection and where it has not.
Yes.
So I think we're all in touch with that, and we're all kind of watching whether it's in the US or from afar. Because again, the US kind of leads the way in a lot of this stuff, at least from a long-term perspective. So when we saw Coinbase against the SEC and effectively now having case law cementing that self-custody wallets does not mean you operate as a broker, and that the wallet really is just a piece of technology. I think that was a
Hmm.
huge win, which it got some airtime a few weeks ago, but I think just in the kind of legal and compliance world, that's kind of given a very solid foothold to a lot of providers out there, and it's a really big win. So Coinbase is doing great things on that front, kind of fighting the good fight and trying to advance the discussion in a way that it can kind of get things to be sustainable and work for everyone on a kind of a business friendly regime rather than the sort of hostility that might be a bit more prevalent in the last few years and all the rigmarole we had to go through to get ETF approved and Grayscale doing their part on that as well. So yeah, I'm sure there'll be more.
Yeah, and I'm hoping our Congress here acts and gets something passed. Hopefully, maybe not this year, but by next year at least after the election. Um, I would love to get your thoughts on the Bitcoin ETFs. In the United States, obviously, we got it approved. A lot of the big institutions, we saw incredible inflows. This week, Hong Kong launched their Bitcoin and spot ETFs. There's talks about London, near where you're located, looking to launch in May. And then there was news of Australia looking to list Bitcoin and Ether ETFs on their stock exchange. So lots happening globally with ETFs. What are your thoughts on how things are progressing so far and the performance?
Yeah, it's really been the narrative that's dominated 2024, and I think with good reason. And has been the tailwind to a lot of the price increases we've seen over the course of the year so far. So yeah, I think Bitcoin spot ETF in the US has been a long time coming. In Europe, there have already been a number of exchange traded products. So if you want to get exposure to Bitcoin through holding securities, that's been possible for a while now. And again, like we were just saying, in many ways, US can sort of lead the way. So it's not surprising we're seeing other jurisdictions that have not been as quick to move are now sort of following suit. So yeah, I mean, I'm not on the financial market side as much anymore, and certainly not giving any investment advice. But I can't imagine anyone buying the ETF at the start of the year is unhappy about that decision, particularly if they were kept out of the market before due to various constraints. So
Right.
I think by all means, it's been a success so far, and I'm sure you and others watching have been tracking the inflows and outflows over the last several weeks, and just kind of how that's propelled to being the most impressive ETF performance in history.
Yes.
So by all means, it's been a great success, right? And I think the second order effect here is that there's still plenty of institutional capital sitting on the sidelines,
Mhm.
which maybe says, oh, we will wait and see what the product's track record is after 6 months. Then maybe we'll be comfortable going in and buying some ourselves. Equally, if you're a portfolio manager, some of your peers are buying and getting exposure to Bitcoin more so than they have in the past, then you don't really want to be left behind from a investment performance perspective if those holding Bitcoin are up and you have no exposure. So, maybe that's just a long way of saying you don't want to be the first one through the door, but also you don't want to be the last. So the launch has been good, and BlackRock just has this massive scale of distribution, which is unparalleled. And we could well start to see a second wave of buyers that have kind of been tracking this thing and seeing how it's performed. And yeah, other markets following suit with exchange traded products in other more local jurisdictions. So I don't expect that narrative is done, and we're going to see more of it. And taking on crypto Twitter, everyone's kind of like, when ETH ETF now. So there's more to come for sure.
For sure, yeah. I'm excited. I know right now we're in a little bit of a cool down, a bit of a pullback, and but I still think we got another leg up. So I'm excited to see what the top looks like. Um, awesome. Really quick before we hit the wrap up questions, I'd love to get your thoughts on, go world governments are building like central bank digital currencies, CBDCs. Certainly a lot of pros, but also people are worried about the cons. I'd love to get your thoughts on that and maybe, also the rise in stablecoin usage as well.
Yeah, so I think, on the stable coins in general, I mean, they've been one of the massive success stories of crypto. You're just having 24/7 dollars on chain and being able to access that. Um, and that obviously caused the central banks to kind of jump to it and also decide, well, we got to figure this one out and kind of have something that can sort of compete with that. They don't want to have dollars just siphoning off into USDC or whatever it might be. And
Mm.
just quickly maybe circling back to Andreas Antonopoulos that we spoke about at the beginning of the call. I think he had a very good way of looking at this when it started happening and saying, well, you're going to have money of the state, you're going to have corporate money, and then money of the people. So obviously CBDCs being state money, and then corporate Circle with the USDC would be an example, and then Bitcoin as kind of money of the people in Andreas's world. So
Mm.
I think that's a useful taxonomy, and we'll continue to see if stable coins are getting more and more adoption, and that's just going to carry on as well. And the CBDC thing, well, that's still kind of in a pilot mode for now,
Sure.
but and there are concerns around, I guess, not to go too tinfoil hat, but government overreach and these kind of things. Like, well, if they control the ledger with kind of even more control than they've had in the past, at least cash was this kind of bearer asset you could exchange and no one could tell you what to do with your cash. But if the government has full programmatic control over your bank account or what you're spending your money on, you can quickly go down a bit of a dystopian path.
Mm.
So who knows if those end up being realized? And it's maybe not so much a question of do they or do they not. I think just CBDCs are great for the general broader conversation and will probably may inadvertently be a great marketing campaign for why people should have Bitcoin or
Sure.
some other permissionless stable coins. So, I think they all kind of have their place, and it's all just going to kind of help with seeing how things pan out over the next several years.
Yeah, for sure. I like what you said about, it could actually be beneficial to crypto, because on one hand, when these governments put out these things like CBDCs, they're going to educate the public more about blockchain. So right away, it breaks down a barrier of people not understanding or trusting blockchains or what it may be or the technology. And then to your point, if they see that, wait, this is even more control, I'll just use permissionless stablecoin or Bitcoin. Yeah, that definitely makes sense. All right, I got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
That's a great question. It's a tough question as well. My own metaverse. I mean, I'd be quite happy for a metaverse that was something like a giant day festival.
Mm.
You kind of turn up, blue skies, it's warm, great music playing on different stages in the backgrounds or whatever. And in between, you're just walking around a bunch of different tents or stalls and kind of having these like little mini experiences of whatever the users or the the citizens of this metaverse want to set up and kind of bring their own thing to it. So, it could be something like performance arts, creating something really wacky is a fun bit of expression as well. Just a good bit of escapism overall, just to have good vibes, taking in some music. I kind of find that's my happy place anyway, when I'm just kind of going to the gigs in the summer and just kind of enjoying a beer in the sun and just taking it easy with friends. So a metaverse in that way of thinking would probably be pretty cool for me.
Yeah, for sure. I agree with you. I'm big on going to like live music events, and I enjoy that for sure. Um, Rapid fire questions. First is favorite
Hmm.
food.
Favorite food? Something with a bit of spice, Korean street food, I'd say.
Nice. Favorite musician or band?
So back to the Dayfest stuff, bluesy, rock. I'm gonna go with Guns N' Roses.
Oh, nice. Favorite movie?
Gladiator.
Favorite book?
Picture of Dorian Gray by Oscar Wilde.
Mm. And when you're not working at Cordial, what are you doing for fun?
Yes, if it isn't going to the gigs, I also spend a lot of time outside doing a lot of running and endurance events, done a few ultra marathons, a bit of mountain climbing and such. So, generally you'll see me, going full escapism into the forests or going on a hike, something to that effect. And we've got a pretty large dog at home as well who loves to kind of get outside. So time with the family and being active.
Awesome. Sebastian, pleasure chatting with you. I got to have you back on in the future as things progress with Cordial, but I love what you guys are doing, and thank you so much for joining me.
Thanks, Tony. Enjoyed it.